Alrighty, and we are finally here. How's it going, everyone? How's it going? Hopefully, you guys are coming from the bootcamp videos. If not, how's it going? My name is Jelani. I go by Ace. I've been trading in the market for about 4.5 years now with some base common knowledge that I want to give to you guys, transitioning into futures. As you guys know, a lot of people are switching from Forex to futures. And I want to give my brief take on why most people are transitioning and why I myself am transitioning from Forex trading to futures trading in 2024. So, with Forex, a lot of brokers were not regulated, they weren't trusted, and I think that was one of the main issues that I noticed. You'll sign up with sketchy brokers that aren't really trusted. So when it comes to regulated and unregulated brokers, it's very important and key to pay attention to who you're signing up with, because if you're trying to make a withdrawal and let's say that broker holds your money, there's not much you can do about it. With futures, there's much more regulated options and it's much more transparent. I think that's another reason why most people are leaving, because the brokers we had assigned or the brokers that were most popular weren't even regulated in the US. And with futures, you actually trade through a centralized exchange, which is called the CME. With Forex, you're trading against your broker. So your broker ultimately wants you to lose. Every time you win a trade, your broker is losing money. With futures, our money isn't coming from the broker, it's coming from the centralized exchange, which is why they mostly call it a fair game. And again, with Forex trading, you're literally trading against your broker. And this is actually a big issue when it comes to prop firms. And I talked about this on another video on a different channel, where these brokers that you sign up with or these companies, they have the tools to manipulate the market with slippage so that you have a better chance of losing that challenge so that they take your money, right? And with futures, there's a lot of BS that doesn't take place in the market because it's not the broker itself manipulating your market. It's global, it's more transparent, it's all fair game. Okay. And that brings me to my next point. It's more professional. So I'm not sure if you guys feel the same way if you're transitioning, but Forex itself, it's just not as professional as it used to be. It's one, oversaturated with a lot of MLMs. A lot of people are trying to get you to sign up to companies, and the name itself doesn't even hit anymore. When you hear someone say Forex, I just kind of cringe a bit. I don't know if you guys do the same thing. The name just, I don't like it anymore. Okay. Future sounds more professional, anyways, and it's much more of a professional market. The professionals, the top investors, they're tapping into futures because their money is safer. Okay. With Forex, it's more of a quick, temporary side hustle gig. It's no longer lasting in the day trading industry. And I'm sure you guys have seen a lot of people fall off through social media, through business, through brands, etc., because Forex itself is not for long investments. And that's just my opinion. It really just all comes down to preference. But I think Forex is much more unprofessional. And if you want to take day trading serious in the day trading industry, I would choose futures. The second point reads Introduction to Indices. So, a little backstory about me. When I was trading Forex for the last 4 years, I didn't touch indices at all. So, I didn't know anything about NAS, S&P 500, US 30. I kind of dabbled a bit with, but I stayed away from NAS and S&P 500. I was mainly focused on foreign exchange, Euro AUD, GBP AUD. Why can't I think of these foreign currencies? The euro, the Canadian dollar, Japanese yen, all these pairs that I focused on kind of took my focus away from indices because I was thinking that Forex was only relative to foreign exchange pairs, which they are. But with futures, you get a more in-depth guide and an introduction to indices and why you should be trading indices overall. And from my experience thus far, indices are much more volatile. You can make a lot of money with them, but it's less flexible. So with indices, you don't have a spreadsheet of multiple pairs like Forex. You can mix the currencies, let's say Euro and AUD, in Euro and JPY. There's no mix and match with indices. There's only a handful of indices to choose from. So I guess it's less complicated if you want to look at it like that. For me, it made my life much more simple because my watch list isn't a whole grocery list. It's just like 4 or 5 pairs and then I'm done for the day. Rather with Forex, if I didn't see a setup on Euro, I would go to JPY. If I didn't see anything on JPY, I go in AUD, and then I go to NZD, etc. With indices, there's only like 4 pairs. My third point is you can trade gold. So one thing I was worried about when I made the transition was not being able to trade gold, which was important to me because I love trading gold. I have my highest win rate on that commodity as an overall pair that I trade. So you can trade gold. It is a bit different in terms of symbol. It's not XAUUSD. It's just /GC. And again, we'll talk about it later in the video. So if you're worried about losing gold, no need to worry. You can still trade that pair. At the fourth point, we have easier to use for beginners. One huge thing for me when it comes to trading is how simple it is to get in and get out of the market. When I was trading Forex, there wasn't a handful of brokers to choose from that allowed me to connect my trading view to my broker so that I can just enter in and enter out. And at the state I'm in, where I'm doing this full time in an office space where I have my desktop set up, I have my trading view set up for my desktop, I don't want to trade on my phone anymore. So I'll say one good thing with Forex was the mobility. When I wasn't around my desk space, I could connect it to my MT4, MT5 and go about my day. But I'm pretty sure MT4 and 5 are banned in the US. So that's a big issue for most Forex traders. That's why they're making that transition, because with futures, it's much more simplistic and you can actually connect your trading view to your broker, which means you can trade directly from TradingView. And I'll show you guys how to set that up later in the video. And the last point, less saturated. So if you're like me, if you want to start a brand or business online and you want to get into the content space, Forex is just dead. Like I mentioned at the beginning, a lot of people are catching up to these MLMs, the people that are much more of a marketer looking for commissions, signups through affiliate links. The whole Forex industry is oversaturated with all that bullshit, and I think for most beginners, they want to stay away from that. People that actually want to trade, and with futures, I mean, if you look online now, it's booming. A lot of people are going to the futures market because there's much more value to be taught. If you are a content creator like me trying to grow their brand online, it's less saturated because futures is much more complex, meaning a lot of people don't know about it because Forex is like the overtaker, which is why I emphasize that there's more business opportunities when you're, I guess, teaching or showing value that is less saturated online. Hopefully that makes sense. So getting started, how do we actually get started with futures? This is going to be pretty quick, so make sure you guys are paying attention. The first thing you're going to want to do is set up TradingView. Signing up on TradingView is completely free, but you don't have a lot of resources. So what I would recommend is for you to buy the essential plan, which is $12.95 a month. It's barely noticeable. I mean, that might be an ignorant comment. If it is noticeable, I would stick to the free plan until you can afford it, but it really isn't too much to worry about if you are making money in the markets, because it is worth it. So with this subscription, you get 2 charts per tab. I use this to my advantage when I'm looking at different time frames to scale down or up. For example, if I'm trading gold on the 5-minute time frame and I'm trying to figure out the overall perspective, I might have another chart with the 4-hour time frame to get that comparison. You have 5 indicators per chart. You have historical bars, but the most helpful tool that I use with this subscription is the bar replay, because when I want to backtest my system over the weekend when the markets are closed, I have this to my advantage. So that's why I recommend this subscription plan, but I wouldn't go anything higher because all this is pretty unnecessary in my opinion. So yeah. So once you guys get set up with TradingView, you then want to get set up with a broker. And before that, I would suggest you bookmark your TradingView website so that you have it to click on in a matter of seconds before you hop into a trade, just so you don't waste any time or potentially miss out on a move. Let's say if you wake up at 8:29 and there's NFP or Powell's about to speak and you don't want to miss out on a impulsive move in the market, well, it's going to take 2 minutes to sign in, load up your chart, and then you might miss out on that move. So I suggest you have it bookmarked on your desktop so that you have it ready to go with a click of a button. So now it's time to connect your TradingView to a broker. Now the 2 brokers that I'm going to talk about in a second are TradeStation and Tradeovate. I use Tradeovate, but this is all to your choosing and preference. But for this example, we're going to go to Tradeovate. So once you load up Tradeovate, you want to go ahead and open an account. One thing I really like about this broker is that not everyone has access to it. You actually have to have a source of income, proof that you're a real person. You know, you have to go through that series of, questions, and it just makes it feel much more secure, in my opinion, instead of just going up and signing up with a random broker of your choosing. I like brokers that actually make you go through a process of evaluation so that they know you want to take this serious. For me, this took about 2 business days to get signed up because I had to send some documents such as my ID, proof of income, proof of living, etc., before I had access to a live account. So once you sign up and once you get that information, I guess come back to this video. It shouldn't take too long. And you're going to want to connect that to TradingView. So what you want to do is just come here to the bottom right corner, click on this button where it's like a half square, and then click on your broker, and then it's going to pop up Tradeovate, Live, and Connect. And now you have access to trade directly from TradingView. You'll know your account is connected when you see this green button next to your broker and the trade button. So the other broker I recommend is TradeStation. I haven't had too much experience with this broker, but I heard that it's just as good as Tradeovate, if not better. But because I'm so used to Tradeovate now, I'm just gonna stick to this broker. If you guys have a hard time with Tradeovate, maybe check out TradeStation and let me know how it is. But with TradeStation, it's just as fast and reliable. You have institutional grade tools, and you can also trade cryptocurrency. So that might be a plus for you guys. Again, it's up to your preference. So now I want to actually go ahead and show you guys what this looks like. So in order to trade directly from TradingView, you're going to want to come down to where it says trade, click right here, and all of this should pop up. You have your stop order, stop limit order, limit, and market. Now what I usually do is just go to stop, depending on where price is at. Let's say if it's not yet at an area in which I'm anticipating price to continue, I place a stop, and vice versa. If I'm waiting for price to hit an area and retrace, then I would place a limit order. So in this example, we're going to use a stop order where we are anticipating price to hit this area right here. And let's say we want to see gold continue down. Okay, so we would get our short position placed at the entry point, and let's just go ahead and scale down to 25 ticks. And let's go ahead and make this a nice 1 to 2, around a 1 to 2. So we would place a stop order, and what we can do is actually drag it down here to that entry point, TP right there, stop loss right here. In this middle number right here is your contract size. We're going to make it 1. Now, if you're seeing these red arrows right here, it just simply means you need to switch from whatever order you're trying to place. So in this example, we want to place a sell stop, meaning we want price to have a continuation and push down to around 26.89, right? So we would go to sell, and now you should be in the clear to press the sell button. So boom, we're in the market. Or we place the order waiting to be in the market once price hits that sell stop, and we have our coordinates right here. And one thing I really like about this is that it shows your potential risk and reward. So if you look down here, it shows us how much we would win in this trade. And if we look over here, it shows us how much we would lose in this trade. So if we win, we make 250. If we lose about 110. And if we want to change the contract size, we would press that button, go to units, and we can change this number to 2, or my bad. And it will simply modify that order. If you guys have the mobile app, which is available with TradeStation, it actually notifies you when you're in a trade. I'm not sure if you guys can see that, but I think this is very helpful because if I have to go to class, if I'm going to the gym, if I'm away from my desk, I'll know if that trade hits my take profit or my stop loss. So I think that's excellent. So in this next section, we're going to talk about some trading terminology that applies to the futures markets. So with futures, we don't use pips. Now, pips simply stands for point of percentage when we were dealing with Forex, which is the measurement of a price movement in the market. For futures, instead of pips, we call it ticks. So in future trading, ticks refer to the minimum price movement or the smallest incremental change in the price of a futures contract. Each futures contract specifies a tick size, which is the smallest amount by which the price can fluctuate up or down. The tick size is standardized by the exchange on which the contract trades. For example, the E-mini S&P 500 is represented as ES. The tick size is 0.25 points. The tick value is $12.50 per tick. So what this might look like in the markets, let's say if the contract price moves from 4,300.00 to 4,301, that represents a move of 4 ticks, since each tick represents 0.25 points, because 0.25 or 25 cents times 4 equals $1. And that $1 is represented as a point. So the trader would gain or lose $12.50 per tick, depending if they bought or sold, which equals $50 for the 4 tick move. And that $50 is simply the sum of that 4 tick move, since the tick value is $12.50 per tick. So $12.50 4 times equals $50. For the next terminology, I briefly mentioned it, but we have something called contracts. In futures trading, a contract is a standardized legal agreement between two parties to buy or sell a specific quantity of an asset at a predetermined price on a specific future date. So a contract size is the amount or quantity of the underlying asset that the contract represents. Each futures contract specifies a set amount. So if you think about in comparison to Forex, the contract is basically the set value of that indice or commodity, whatever pair you're trading, that represents its value before you enter in a trade. And with futures, you can actually put in multiple contracts per trade to double your risk or reward. And then our last trading terminology is the expiration date. Futures contracts have specific expiration dates when they must be settled. The expiration date determines when the contract must be fulfilled. So one of the major differences between futures and Forex is that we have certain dates that we need to trade for that specific contract before it ends. So with Forex, you could trade any type of pair on any type of month. With futures, there are certain months that apply to certain contracts and which are relevant to the markets. And we'll talk about that in a second. But these are the main differences when it comes to trading terminology. You have ticks, you have contracts, and you have your expiration date. So here we have the different sizes for each future, or the most relevant futures that you most likely will be trading. We have US 30, S&P 500, NASDAQ, copper, gold, silver, and oil. We're not going to focus on Russell 2000 because this is ICE. We're only going to be focusing on the SME pairs because they're much more relevant in my opinion. So we have the symbol, the tick size, the tick value, the point, and then we have the month in which that contract is relevant. So you might want to screenshot this or save this somewhere, because this is going to be extremely helpful if you're trying to get familiar with these symbols and the tick size and the value per tick and the month codes, because it took me about 2 weeks to get this down without looking at my notes. Another resource you can use is the website itself, which is cme.com. I have it right here. And you can actually find information on whatever pair you're trading by going to the main page, go to the top where it says markets, and then you can click on whatever pair that is relevant. For example, if you want to find out the value per tick on the E-mini S&P 500, we would click ES. And then you would go to specs right here. And then if you come down here to the, oh, I think I missed it. If you come down here to the minimum price fluctuation below outright, you'll see 0.25 index points equals $12.50. So you might want to save this website as well to have to your advantage when you're trying to understand the value per tick, so that you don't end up over risking before you understand how to use risk management, which we'll talk about in a separate video. So if you guys are enjoying this one so far and want to see more, be sure to subscribe so you never miss out once it drops. And as far as the month codes, you can save this as well, but it is a simple Google search. But you might want to have this in your arsenal in case you forget what month we are trading. And then you have your month codes for indices. March is H, June is M, September is U, December is Z. This is by far the most important one that you'll see over and over again, because if you're trading indices like me, S&P 500, NASDAQ, then you're going to want to be using or keeping an eye out for these type of month codes in case you are on the wrong one. The easiest way to remember these codes is to go by quarters. So quarter 1 is H, quarter 2 is M, quarter 3 is U, and quarter 4, which is the one we are currently in, is Z. So when it comes to these monthly codes, the other thing that goes with this as well is that you have to be trading the front month of every pair. With Forex, you don't have a month to keep up with that pair. You just trade the pair on any type of day, any type of year, right? And with futures, we have certain pairs that are relevant depending on that quarter. So on gold, for example, this is what the first quarter would look like. We have GCH 2024. Second quarter, we have GCM 2024, 3 GCU, and 4, which is the one we're currently at, GCZ 2024. And if we go back on TradingView, you can see what this also looks like. So on gold, oh, look at our trade. Oh, actually, this was pretty good. So as you can see, we are currently in the trade. Our order was activated, and you can see that we're currently in drawdown for about $40. And one thing I really like about this is that it also shows you in live time where you're at instead of through your mobile device. So in case you want to close, modify, adjust, you have all that on TradingView. But what was I just saying just now? Okay, yeah, so if we look in the top left corner, you see where it says GCZ 2024. So we are currently trading the relevant market to the relevant month. One easy way to find or make sure that you're trading the relevant pair to your broker is to come to the watch list, press the plus sign, and on the top right, you'll see your broker. If you click on that, it will show you all the relevant pairs that are relevant to your brokers. So instead of trying to search in the general tab, because I know I had some trouble with this, trying to find the relevant pair on that broker, just click on your broker once it's linked and it will show you all the pairs that you can trade with, which is fantastic. Makes my life 10 times more easier, and I'm sure it will make your lives easier as well. And if you come over here and click on the left, you can actually choose the relevant month of that choosing. So NQZ 2024, this is where we're at the pair, and now it's on our watch list. Oh, I actually just took it off because I already had it on my watch list. Let me click on it again, and it should show up right here. Easy peasy lemon squeezy. One thing to keep in mind is that you need to roll over to the new contract on the third Friday of the delivery month. You can also identify the front month by looking on the CME website for highest volume. So if we go back to the CME website, if we go to the main page, let's go ahead and click out of this. Come right here. Okay, we go to markets. Let's say we're looking at gold. And then we come to insights right here. And if we come down here, we can figure out which pair is relevant to the markets by looking at the total volume. Notice how we have the highest volume in this column. So we come to the left, December 2024. This will tell you what month is relevant. So because we're in December, that monthly code would be Z. Okay. So my final thoughts for the transition thus far. I think it's extremely worth it for those that are trying to take day trading seriously and they're trying to invest their time into a more regulated system that's going to ensure that you have a more safe and authentic journey. I think futures is the way to go, in my opinion. Coming from someone that's traded for 4 years plus in the Forex market, it's not worth it if you're trying to scale up, because there are so many barriers and BS that you might encounter, which can be avoided with futures. One thing I want to talk about real quick that I didn't mention before is the time frames. So if you're used to being a swing trader or intraday trader where you're trading certain sessions on higher time frames, the 1 hour, 4 hour, or even daily, say goodbye to that. Because with futures, what works or what has worked for me is scaling down to maybe on the 5-minute or 30-minute and catching nice tight setups so that I can double up or scale up on contracts. At least for me, I don't want to talk for everybody. I've been able to adjust to the lower time frames and create a system that's able to make me a good amount of profit on good weeks. So I'll have a different video posted potentially this month about that system that I implemented, where you're basically trading the same type of concepts when it comes to top-down analysis. You're just executing on those lower time frames and catching those fast moves. So yeah, the time frames is definitely a big one that you'll have to adjust to. And that's pretty much it so far. There's not too many differences in terms of like concepts and strategies. It's literally the same thing. It's just better. Think of it like Algebra 1 to Algebra 2, which is why I have the whole boot camp up on my channel. In case you guys are super new, if you never touched Forex, never touched trading at all, I recommend watching all those videos and then coming to the present time to watch these futures videos, okay? And the last slide, I'm just talking about my Discord. I am reopening my new SMA trading community. The whole idea is that I'm going to live trade. I'm going to help you guys adjust from that transition. Forex pairs will be included at the very beginning, but over the course of time, I'm going to delete those servers and just focus on gold, NASDAQ, and S&P 500. We have the trade recaps, and the community is open 24/7, free education, and you have a free trial for potential members. And just to show you guys what this looks like, we have the chat room, we have all these trade ideas. Now, the ones that are locked are going to be for members that trade futures, but the ones that are unlocked are for those that are still making that transition. So I'll still help with gold, AUD, CAD, Euro, GBP, USD pairs throughout the week. And then I have my live streams Monday through Thursday, which you'll be notified from directly from the Discord, new videos, community suggestions. And then we have our breakdowns, wins and losses on trades that I take. You will also have access to free PDFs like Naked Forex or the Candlestick Bible, concepts and strategies you can study throughout the week and weekend. And you have access to mentorship. So again, all this is free for now, but if you want to become a member, you can start the free trial and get access to the future setups that I have throughout the week. All right. But that's about it. I hope you guys enjoyed this video. Let me know if this was helpful. And if you have any questions or concerns about futures or making that transition, I'll be more than glad to answer any type of questions in the Discord. But yeah, I hope you guys enjoy the rest of your trading week. Always remember to use risk management because we're in for the long game, not the short game. Until next time, see you guys in the next video. I'm out.